Namaskar viewers, hello and welcome to Sansad TV. I'm Teena Jha, you're watching Perspective. On the show today, we discuss the Sabka Bima Sabki Raksha Amendment of Insurance Laws Bill 2025, which signals a transformative shift in India's insurance industry. The bill amends three foundational laws: the Insurance Act of 1938, the Life Insurance Corporation Act of 1956, and the Insurance Regulatory and Development Authority Act of 1999. The bill proposes to raise the FDI cap from 74% to 100% in Indian insurance companies, although with a proposal to have one of the top officials at the rank of chairman, managing director or the CEO as an Indian citizen to retain certain domestic control. Other salient features of the bill are that it aims to grant the insurance regulator, IRDAI, new powers to recover wrongful gains. The bill also provides greater operational autonomy to the Life Insurance Corporation of India, the LIC, allowing it to set up zonal offices and align its overseas operations with the laws and regulations of respective jurisdictions. As per available data, in FY24, insurance premium penetration was 3.7% of the GDP, with life insurance at 2.8% and non-life at 0.9%. Per capita premium rose to 8,297 rupees in FY23. General insurance is expected to grow 8.7% in FY26, while life insurance is projected to grow 10.5% annually between 2025 to 2035, positioning India as the second largest life insurance market in the region. So how will this bill expand insurance coverage, bringing more citizens under the insurance security net and drive faster growth, while ensuring stronger protection for the policyholders? This is what we will focus on the program today. Joining us are two guests. I'm delighted to welcome on the program Mr. Suresh Mathur, former Executive Director, IRDAI, and Dr. K.C. Haridas, PhD Insurance, FIII. He's a composite insurance broker. Thank you, gentlemen, for joining us on the program today. Welcome to Sansad TV. Mr. Mathur, let's begin the program today with you. Given your extensive experience with the IRDAI, how do you view the recent amendments in the insurance laws, and what kind of impact do you think these changes will have on the overall insurance landscape of India?
Yeah, these amendments were essential if we have to reach the goal of insurance for all by 2047, which is the government's goal and the regulator's goal. So the foreign FDI, which has been made 100%, will enable more capital inflows in the sector. It will enable stronger competition. It will enable this will also enable to modernize the regulations. Particularly now we are moving from penalties to real accountability. Like you have mentioned that this IRDA has now gained powers to recover wrongful gains made by either insurer or the intermediaries. So, and then it also enables more product innovations, and it gives more powers to LIC to go with the market, and they can open zonal offices without government approval. So it gives more power to the board of LIC, and also it will help in market expansion and penetration. As you have mentioned, that penetration is less. More capital inflows, more product innovation, and this will also enable more digital approach, like we can reach out to people through digital means in the rural areas. So this bill is a comprehensive legislation which will transform the insurance landscape in India.
Certainly, India's insurance penetration, if we compare to the global standards, it's relatively low, Dr. Haridas, and this bill aims to expand that insurance coverage across the country. How do you think the proposed changes in the bill will help increase access to insurance, especially in the rural and the underserved areas of the country?
Good evening and welcome viewers. Namaste. This new provision for increasing FDI from 74% to 100% is a very welcome step in the sense that this will bring in much needed foreign investment into the Indian market. And we expect new foreign insurance players to enter the insurance market. And also, this will help in technology upgradation and better global practices of underwriting, claim settlement, technology, IT, etc. So this is definitely a welcome step, and this our finance minister has definitely kept the view of insurance for all by 2047, and I expect the insurance penetration to go up substantially in another 3 to 5 years.
Now, with the increase in the FDI cap from the existing 74% to 100%, Dr. Haridas, how do you think the foreign investors will perceive the Indian insurance market? Do you see this also leading to more product diversity, which is much needed in the insurance industry?
Yes, the foreign insurers and foreign investors will see our insurance industry, our market, as a developing one, and it is going to be a developed market in another 10 or 20 years. And 2047, as our FM has said, will be a definitely will see insurance penetration going up from the present 4%, which is around 3% for life and 1% for general, to at least 10% of the GDP. That's my assessment.
Mr. Mathur, how do you see the rise in FDI from 74% to 100% impacting the competitiveness, the stability of the insurance sector in the country? And if you could also elaborate on some of the risks associated with foreign investment, some of the checks and balances that this bill caters to?
Yeah, the FDI, 100% FDI will certainly attract more foreign players. There were issues regarding the joint ventures with some of the foreign players. Now that thing is over, they can directly come and invest. They will have more freedom to introduce best practices in Indian market, and also to innovate more products, particularly in health and say IT and all that. So they will have more freedom to do it, and they will more FDI will come. That will help in more penetration of insurance business in India. Particularly, India, as you know, is a underserved market, and the more capital will ensure more reach of the insurers in the rural areas through digital means or directly also. They can open more offices also once more capital is available to them.
When we talk about foreign investment, there are certain risks associated, but at the same time, this bill tries to check that. It says that the top leadership, which includes the CEO's position, the chairman's position, the position of the managing director, that has to be held by an Indian. How much of the risk threat will it bring down if the leadership position is given to an Indian, but the FDI you've raised to 100%? If you could elaborate more on the kind of safeguard mechanism that this clause in the bill puts it at?
Yeah, the risk, as you mentioned, there can be two risks which we can say. One is the market dominance risk. The foreign players will come and they will ensure that the smaller players are out. So this market dominance risk is there, which with the good regulatory governance and supervision will not be there much. And also the profit repatriation risk concerns will also be there. Because now with the 100%, they would like to repatriate as much as profit back to their country, to their parent office, parent company. So these are some of the risks which I can think of as of now. And maybe some foreign players would like to prioritize urban urban segments with high margins. Our objective is that they should go deep into the market. So these are the few of the things, few of the risks which I can see as of now. But with regulatory oversight, will ensure inclusive growth. So the regulator will have to play a bigger role and better supervise the market. That's what my thinking is as of now.
Okay, this was about the safeguards against the risk associated with foreign investment, but at the same time there is also focus on consumer protection and accountability, which we are seeing is quite strong in this bill. Dr. Haridas, how do you see this impacting the relationship, most importantly, between the insurance companies and the policyholders?
The accent now is on more protection for policyholders, and one fund is also going to be established by IRDA, which is meant for educating the policyholders, which is a very welcome step because education in the insurance sector is very much lacking at present. Learning and development is a continuous process, and some funds earmarked for this is a very welcome step. And also, statutory, we are moving away from statutory to a regulator controlled regime, which means that IRDA, the regulator, gets more powers. So that it is in the regulator's hands to give support to the policyholders, to the intermediaries, and to the insurers.
Mr. Mathur, what are some of the biggest gaps when it comes to consumer protection? How do you see this fund that Dr. Haridas also mentioned addressing some of these gaps that exist, and in terms of impacting the relationship between insurance companies and the policyholders, do you see it creating a more transparent and trustworthy environment?
Yes, actually the earlier regulatory regime, if there is a mis-selling or is any wrongful practices adopted by the insurers and wrongful gains they have done, we used to impose penalties. But now it goes further, that it has given IRDA powers to the wrongful gains to be given to the rightful person. So those powers were required because we were just giving penalties, but we were not addressing the issue fully, because like the policyholder who has been affected is not benefited by our actions, because we are imposing penalty. But now this gives powers to the regulator to the wrongful gains can be given to the rightful person. So this kind of a structure has come, which is basically a comprehensive thing, which will benefit policyholders directly.
Okay, but Dr. Haridas, do you see it having a deterrent effect, or will it lead to over-regulation? Because we see at times that this kind of empowerment, this kind of provision leads to over-regulation, and which at times does stifle innovation. Do you see any risks in that area?
It will not lead to any over-regulation because some regulation, control, checks and balances are required for the insurance industry and the insurance regulator. Especially the present chairman has been very proactive in this, and we expect that the policyholders, customers will definitely get support from IRDA. At present, there are thousands of grievance cases filed on insurance companies, especially standalone health insurance, and the fear of penalty should favor the policyholders. That's my feeling.
Okay, since we're talking about empowerment and autonomy, there's operational autonomy for the LIC that has been proposed in this bill. It grants the LIC greater operational autonomy. Mr. Mathur has already spoken about how this is quite significant, but if you could elaborate for better understanding of us and our viewers, Mr. Mathur, on how in a rapidly evolving insurance market, could this autonomy help the LIC? If you could cite some examples and explain to us how it's going to be beneficial for the state-owned insurer in the long run?
Yeah, it gives a lot of autonomy to the board of LIC, particularly for every like opening of office, like in Northeast, or in any area, or maybe any area which is not covered by the private players. The LIC used to run to the government for taking approval, which sometimes used to take time. But that autonomy, once it is given, they can swiftly move towards that, and their presence can be felt on these areas, and they can take swift decisions. and move forward.
Dr. Haridas, coming back to the core objective of the bill, which is insurance for all, you spoke about the growth projections, which of course for the insurance sector look quite positive at the moment. But what do you think are the major challenges to achieving the targets? Because the key lies in the implementation, and going forth, we will need to have realistic roadmaps to achieve these targets. How do you think the insurers and the regulators can work together to address some of these challenges that persist?
The insurance companies, they should bring in more innovative products and customer friendly products, and in this the regulator has a role, in the sense that at present there is a file and use provision for new products, and I expect that the insurance companies, especially the ones who are coming from abroad, the foreign insurance companies, will bring in better products, and that will definitely benefit the customer, and also this will generate the much needed employment growth in the country, because the foreign insurance will need officers and sales people, underwriting, claims people, technical people. This will definitely generate in more employment, and also the regulation is now easing licensing of surveyors and loss assessors. This will also generate more employment. At present, the provisions are very stringent for getting a surveyor's license.
I'll come back to you, Mr. Mathur, and on the point of LIC, I had a question in mind, because compared to the growth that we are seeing among the private players in our insurance industry, how do you view the competition between the public and the private players? And for LIC, which is state owned, how do you see the growth happening? There is of course greater autonomy, but there is also greater competition from the private players. And now when you have opened up foreign direct investment, there will be more competition, there will be more opportunities from these private players.
I think LIC is well equipped to handle this kind of competition. With their strength and the reach which they enjoy, which no other insurer or no other public sector enjoys the kind of reach which LIC has. They will certainly will be able to do better, because a lot of autonomy has been provided to them in the bill. And they can also equip themselves more and come up with more innovative products. That's what I can say as of now.
Okay, so while this bill tries to address some of these gaps that persist and take care of the problems that have persisted for long, especially in the Indian insurance market, the core objective of this bill, of course, is to expand the insurance penetration, something that we've spoken about, that compared to the global standards, our insurance penetration is quite low, and this bill tries to address these. That's why it's opened up foreign direct investment, taking it up from 74% to 100% now. But looking at the global insurance markets, Dr. Haridas, especially if we compare ourselves to the developed economies, how do you see India's regulatory framework compare, and does this bill sort of try to address those gaps, or are there lessons that we can learn from the international experiences, and which you find this bill also addressing?
Yes, I have studied the regulations of at least 5 countries in UAE and also in African countries. So compared to that, our regulation is far clear and objective minded, and we have a very good regulatory framework in place, and this is meant to protect the policyholders and also develop the industry. So compared to global standards, our regulation, I would say, is much better.
So as India's insurance market shifts more towards digital first solutions, what steps do you think the industry must take to bridge that divide? And is there a risk that less tech savvy populations could be excluded from the benefits, although it could not be true for India, because India today is one of the most digitally empowered societies, but to ensure that no one is left behind, the benefits of digital insurance models cover everyone. What is it that you would suggest?
I think that Indian population as a whole, they are quite tech savvy compared to other countries. Especially we have the linking of Aadhaar, UPI, Aadhaar with bank accounts. This has been very successful in this country, and I feel that the people, even the common man, can use online platform for taking insurance products, insurance policies. That's not difficult for them. And very nook and corner of the country, we have this what you call that customer service centers, CSCs set up by the central government. They can go there and take the policies if they so wish.
Another question, Doctor, to you was that there is also a proposal of a one-time registration for the insurance intermediaries and
Yes.
changes to the shareholding thresholds. Explain to us how these reforms will affect the role of the insurance agents and the brokers. Will it make it easier for them, or will it make it a little more complicated and something that they will have to perhaps invest more time in learning?
Well, at present, insurance broker has to renew the license once in 3 years, and this process starts at least 6 months before the expiry of the license. And so much of documentation is involved, and statistics have to be kept, etc. And for agents also, they have to submit returns, if not to the regulator, to their insurance companies. So in this way, one-time issuance of license for intermediaries is a very welcome step, and this has to be appreciated. And the broker is now free to concentrate on client servicing rather than on statistics.
Okay, as we wrap up the conversation, Mr. Mathur, I'll take one question from you. Looking ahead, where do you see India's insurance industry in the next 5 to 10 years? And will these changes that the current bill proposes, how do you see these changes actually shaping the evolution of India's insurance industry?
These changes will have a very far-reaching effect, and I think the growth, the industry will be on a growth path, and particularly the customer protection, which has been introduced, which completes the whole cycle, because by imposing penalties, we are penalizing the insurer or the broker, but we are not addressing the issue. So these will bring in more trust with the policyholders, with the general public, and it will ensure more customer protection. Now, with the times to come, the Bima Sugam platform will also be available, which will ensure more penetration of insurance business. Anybody can access that platform and buy any product from any company, and look at it. It will be like a marketplace. And as you know, Indian public is more IT savvy as compared to other jurisdictions. So I think it will certainly have more effect in India in the times to come.
Certainly, it's a tech-savvy population, but it's also important to make them aware about the changes and about the new rules as and when they are implemented. One last question to you as well, Dr. Haridas, since Mr. Mathur spoke about the policyholders, education and the protection fund earlier on in the program. How do you think the government and the insurance sector can collaborate more effectively to raise public awareness about not just the importance of insurance and its benefits, but also about how it can contribute to a better lifestyle? What role do you think other stakeholders can also play in shaping the narrative around insurance coverage, the need to have insurance coverage?
Yes, I would suggest on the lines of SEBI. SEBI has mandated all the mutual funds to have compulsory customer education. They have to put up a separate budget for that, and they are supposed to create awareness among mutual fund industry, among the buyers of mutual funds, SIPs, etc. On the similar lines, insurance company IRDA should also mandate compulsory education of policyholders by the insurers and intermediaries. This will be a welcome step. And also now niche players can come in, like the new provisions provide for players to come in, cyber insurance, etc., which is a very welcome step. And for this, we do not know whether the 100 crores that is 1,000 million Indian rupees requirement is required, or it will be lowered. It has to be seen.
Absolutely. It's important that the insurers and the regulators and the government all work together to make sure that there is adequate awareness about insurance and its benefits among the people. The proposed changes in this bill also significantly try to shape the future of India's insurance sector. So right from boosting FDI to enhancing consumer protection to also expanding insurance coverage across the country, which is the core objective of this bill. These are amendments which indicate a transformative step towards a more inclusive and a more innovative insurance landscape in the country. With that, we'll have to call it a wrap on this edition of Perspective. Thank you once again, Dr. Haridas and Mr. Mathur, for joining us with your thoughts and views on this key important bill on the insurance amendment laws. And to you viewers, thank you very much for your time as well.
संसद टीवी के और भी प्रोग्राम्स देखने के लिए सब्सक्राइब करें हमारा YouTube चैनल और हाँ, इन्हें लाइक और शेयर करना ना भूलें।